Hey, what is up? Welcome to this episode of the Entrepreneur to Entrepreneur podcast. As always, I'm your host, Brian Lofermento. And in today's episode, I feel like we are all going to get a giant push that we all need when it comes to actually having our money make us more money. As entrepreneurs, we love to work, we love to hustle, but we're not always the smartest when it comes to finances and investing and letting our money grow, just like we're obsessed with having our businesses grow. So we are bringing one of the best in today's episode, an incredible entrepreneur, as well as a really incredible investor that not only is great at what he does, but he's great at helping others grow their money as well. So let me tell you all about today's guest. His name is Rod Casilli. Rod is the founder and lead trader at the tradersdevGROUP. He's been an active futures trader and automated strategy designer for over 20 years. He began his career at Merrill Lynch during the tech speculation craze, spent time trading millions of shares of stock as an SOES bandit, which he'll decipher all the financial lingo here in today's episode. And then he transitioned to the futures market in the fall of 1997, corresponding with the release of this S&P E-mini contract. Most recently, he's moved beyond the screens into private equity investing with a portfolio of over 10 companies, mostly consumer brands. And I think what's really cool is he has the firm belief that if you want to learn about this stuff, there's no other way to learn about it than to do it. So his business is incredible. We're going to get into all that and more. So I'm excited about this one. Let's dive straight into my interview with Rod Casilli. Rod, super excited to have you here on the air with us today. First things first, welcome to the show.
Thank you so much. Let's hope I can live up to that bio.
Heck yeah. Well, there's certainly a lot to live up to, not only as a trader, but as an entrepreneur. Let's start with the trading side. Obviously, you love finance. You love the world of investing. What sparked that passion for you?
Yeah, I think what it was just the uncertainty. So a lot of people are not wired for speculation because they don't like to venture into the unknown, right? And in fact, the reason that a lot of people perceive active trading or even actively investing as sort of a gamble is because they know that there's no guarantee that anything's going to work out. I actually fed into that and just love that. I had a couple regular jobs early on. I was like, I know exactly what my paycheck is going to be every couple weeks. It just was not how I was wired. So initially, I just loved the concept of making the best decision you can with incomplete information, and I've been doing it ever since.
Yeah, Rod, I think we honestly have to start there because it's something that impacts the world of entrepreneurship, but also finance. It's two keywords you already talked about, active versus passive. Everyone's in the pursuit of this mythical passive income with regards to their business, but obviously a lot of it is we have to pay attention to this stuff. What's your take on it? We've heard so many case studies through history of active investing portfolios versus passive. What's your take on all that?
I think it really has to do with your interest. I would never tell somebody that is like really, really into their job and what they're doing or their entrepreneurial pursuit and doesn't really, they know they need to invest, but if it's not really their thing, a lot of the time they go to an advisor. So again, this is not financial advice. Look both ways before crossing the street, all that good stuff. But if you're not really into it, I don't want to use the word passion, but if you just don't have an interest in it and you know you don't have an interest in it, you need to invest, then it is passive. Just put money every single month into a Vanguard low-cost index fund. You've heard that before, but just do it and do as much of it as you possibly can. And again, not financial advice, but if you actually are a high-income solo entrepreneur, there are a lot of good defined benefit plans and solo 401ks where you can sock a lot of money in and you make a bunch of money the moment you put it in there because you don't pay taxes on it. So it's really, if you're not into, and you know it's not your thing, then just make sure you do it passively. But if you do like it and you care and you every once in a while you go, hey, I wonder what NVIDIA actually does, or I'm interested in this, or I'm interested in that, or I just bought this new clothing line and I saw that they were public. You know, I have a case study for this myself with Lululemon. I had never been in a Lululemon before and decided to not invest. And once I started to wear their clothes, I just went, hey, I'm just going to do it the old-fashioned way and just invest in what I know. So if you do have an actual passion for it or interest in it, then you do want to spend some time and understand the skills associated with running your own investment portfolio, whether you do that with an advisor or just by yourself. If you're into it, you got to do it. If you're not, passive is the way to go.
Yeah, Rod, I want to ask you this question then, because obviously you and I chatted a little bit before we hit record here today, and I somewhat shared with you that you are the gateway drug for a lot of our listeners, because I don't think we talk about investing a lot in the world of entrepreneurship, but it's partly to our downfall because we are hustlers. We love taking action. You're one of us. You're a fellow entrepreneur yourself. And we all have that work ethic, which sometimes means that we make things harder than they should be. We love trying to go get more clients. We love growing our businesses, but we don't necessarily grow our net worth to go along with it. It's why I throw a little bit of shade when people want to talk about top line revenue numbers while ignoring the whole rest of the puzzle. How far would you go in saying that we all have that obligation as we are growing as successful entrepreneurs, as successful business owners? How essential is it for us to start that investing focus as well?
It's a 100%. I mean, there's nothing else. I mean, unfortunately, what a lot of people do is once that money starts to roll in, they go all to accounting and taxing and how can I save on taxes and set up a Swiss bank account or some sort of trust. And is this legal? Is that? And they go all tax. I get a lot of that served in my social media feeds because it is of interest to me. We want to be able to protect our income. But before you start thinking about any of that, just make sure that you have a way that you understand. Look, you are an entrepreneur. You're investing all this time in your business and all this energy, and with a lot of uncertainty, especially when we're smaller entrepreneurs, as to what the outcome will be. When things start clicking and things start working, just do what you naturally were doing with your own business. Invest in other businesses. I chose to use, again, a very high risk approach, which is private equity, which is just small non-public companies and a variety of different brands, and we can probably get into that. But yeah, you owe it to yourself to make sure that when that extra income is there, it's the age-old thing. It's just diversification. If you keep piling your time, effort, and money only into your own thing, all those eggs in one basket, it feels great. And by the way, that is the way to ultimate wealth, right? The wealthiest people in the world, of course, have most of their dollars in the company that they founded or work for. But when we're small, we have to diversify a little bit. So yeah, as soon as things are clicking, make sure that you start with investing before you start to figure out all the tax benefit stuff you can do. Because again, if you just put money away in your retirement, you're saving 30-40% on every dollar you put in there, regardless of what you invested in.
Yeah, I'm glad that you point that out. It's something that I realized when I was a young entrepreneur. I started my first business at the age of 19, and I heard that English phrase of penny wise, pound foolish. Entrepreneurs will obsessively find a way to save a penny in order to, or which will hold them back from making a dollar. And so it's that cost cutting. We hear it from the traditional financial gurus of, don't buy that $7 Starbucks, as if that's going to magically appear. You're going to have a house down payment in a month from now, which obviously that stuff isn't real, but you're giving us the real stuff here today, Rod. You're saying things like risk and diversification, which we've all heard before. Talk to us about the actual dynamics of it, because a lot of people, we are risk takers as entrepreneurs, but you talked about private equity being one way to invest. What are those different types that should even be on our radar and that are worth us paying attention to?
Well, again, once you have the foundation that I said, and let's pick an avatar or a profile of somebody. You are heads down, loving your business, everything is going well, and we know that that's not always the case by a long shot, but you have the ability to create that foundation. Make sure you start with dollar cost averaging into low cost index funds, and do that in a retirement setting for the most part. That's your baseline. Once you have then maxed that out, again, I'm going to talk my own book, as we say in trading. Most entrepreneurs, I think, are just going to want to gravitate more towards private equity. And here's why. I mean, we can all buy Apple or Nvidia or name your favorite stock. And again, if you're dollar cost averaging into an index fund, you already own that stuff, right? So rather than try to figure out, or even now crypto, right? Is Bitcoin going to go to this or to that? It doesn't really matter. How much more exciting is it to just go out and network in the world and find other people like yourself or anybody else who's starting businesses and just hear their pitches? And, there's VCs, private equities, they've been around forever. They have all these different methodologies that they use to try to decide what to bet in, what to bet on and what to invest in. But really, unfortunately, what it is it's just you put a little bit of money into 100 things and 90 of them don't work and 10 of them do. Most people don't have the opportunity to spread their investments across 100 different things. But if you put in place, hey, over the course of the next 2 years, I'm going to go out and find 5 entrepreneurs in some sort of maybe a business I'm in, maybe a business I'm not very knowledgeable about, and see if I can invest in their companies. And again, we've all probably seen Shark Tank and things like that. If you're in early, you get some pretty good valuations for the risk that you're taking. So again, once you have the baseline, then I would move up to private equity. And don't let that scare you. That simply just means, you could invest in my business if you want. I'm a private company. That's the idea. Just start with that. And most entrepreneurs have pretty good networks too, and know bright, intelligent, motivated, aggressive people, and see if you can invest with them.
Yeah. Rod, we already know where crypto's going, don't we? Isn't that what everyone says on X? Going straight to the moon.
Of course. Yeah.
So let's talk about that actually, because I do feel, and this is something that I find interesting. Again, it's so many things extrapolate into the world of entrepreneurship, is that there's all these trends and there's all these fads. I remember NFTs were all the craze during the pandemic. I couldn't help but shake my head and facepalm quite a bit. So Rod, I'm excited for your more professional opinion on all these things. But let's talk about the fads versus the foundations, because what you're coming at us with here today is find good businesses and invest in them, because good businesses have a tendency to grow. Talk to us about how to dispel and dismiss all the fads that pop up. And actually, is that the way? What are your thoughts on these fads that come and go?
Well, the first thing is it's difficult to avoid them, right? We all feel the word that this was an acronym in my trading business only 20 years ago, and now it's everywhere, which is FOMO, right? The fear of missing out. We had other acronyms for it. Maybe they're a little bit less PG, but that seems to be all the rage these days, right? And there used to be a investing approach, which was the moment you saw something on the cover of Time magazine or some big media publication, that was the time to sell, or when the taxi drivers or Uber drivers are talking about it. So I get that it's hard to avoid those shiny objects, because it seems like all you hear is how well everyone has done in all those things. But look, if you're an entrepreneur, you know how difficult it is to run a business, how difficult it is to time things, how much luck is sometimes involved in all sorts of kinds of things. That applies to the world of investing as well. So there's a good chance that once you've heard about any of these things, that they've already passed you by in terms of being able to get an actual return for the risk that you're taking. And this is an important point, right? If you're going to take risks in like private equity or in crypto or things like that, you need to have ability to calibrate what your return is. If I'm going to put $10,000 into some crazy small crypto, I probably am going to lose it all. But since it's crazy and small, I probably also have a chance to make 5x or 10x or whatever the case may be. So you have to understand your risk profile and who you are and how much money you can afford to lose. But the simple answer is, if it's too good to be true, or if you're hearing all about it, try to stay away from it. And if you're going to invest in riskier things, make sure they have a tremendous amount of upside, because the probability is that the investment might not work out.
Yeah, I'm super grateful that you're coming on the show and sharing this with our listeners today, Rod, because this is the real stuff. We crave these conversations here on this podcast, and that's what listeners are used to. So this is the real stuff, cutting through the noise. I feel like with social media, we hear about a different fad every single day. But there's one disclaimer, because you said this word, the term too late. And I know that that's an objection. Quite frankly, I think it's an objection to most things in life. People don't start their podcast because they believe they're too late. They don't start their YouTube channel. They don't start their business. People are always afraid that they're too late to the party, when the reality is, I've always loved that as a finance major in undergrad. I've always loved that simple phrase of time in the market beats timing the market. Can you talk about that, Rod? It's something we've never touched on this podcast.
You nailed it. I mean, a lot of the time the adages don't have much wisdom in them, but that one certainly does. So we can take both those things away. The greatest trading strategy of all time, if you can even call it a strategy, it's just a tactic, is DCA, just dollar cost average. And then the next C is compound. Put the money in, put it in consistently, then you don't care about the price. And to your point, Brian, then you're not trying to time necessarily the market. You're putting in the same amount of money. And by the way, once we become entrepreneurs and we're not working for the man or the woman or whatever, or the corporate culture in that world, we don't have access to a lot of those programs. We have to set them up for ourselves. We have to learn about how much we can contribute ourselves and how we can take care of our employees if we have them as well. So there's a lot of education just on getting the foundation. But once the foundation is there, it is KISS. You just keep it simple. Keep it so simple, and then dollar cost average, because you can time things in the short term. Absolutely. I want to really make sure that people understand that if you were going to more actively get involved in markets, you can certainly learn how to look at charts and certainly understand how to buy things at better times. But for that is only after you have the whole foundation. So I didn't want to necessarily say don't start or it's passed you by. I'm just referring to once everyone is talking about NVIDIA, which is probably a company no one even heard of 2 or 3 years ago, that's probably a little late for you to pile into a name like that. But make sure you're investing every month, because there's a good chance now you're buying a little NVIDIA, because that will be in all the indexes.
Yeah, I love that overview. I'm going to bring up another common objection, and I'm sure that you hear this more than I do, but I ask it to all of our guests who come on when they talk about marketing and they talk about how you can effectively have ad campaigns. And that's the question, the objection: how much does it cost? How much do I need to start this stuff? Rod, it's the concern of so many people, especially when we have our businesses that we're investing in. We have marketing that we're investing in. How much do we need to actually start making money that's worthwhile when it comes to investing?
Yeah, that's a question I get asked all the time, especially since what Traders Dev Group is a little bit more on the active side. So that's the risk capital side. So people want to make sure that they understand how much they could potentially be putting at risk if they get involved. Look, that is probably something to go through with other trusted financial advisors, or however you might be funding your business, to understand exactly where capital should be deployed relative to your business, relative to your employees, and of course then relative to you and your family and things like that. So the situation is going to vary, but there's, just like you said, time, and there's no time like the present to start. Even if it's a small amount, it doesn't matter. And if it's a much larger amount, then you really need to start, because you're paying taxes on all that money that you are not sheltering. And again, I'm not talking about wild offshore trusts. I'm just talking about, there's only really 2 tax havens left in this world, and they're mostly retirement plans and real estate. So you got to be involved in one of those 2 things pretty heavily if you want to shelter yourself from taxes. And as I've already mentioned before, if you're in a high income tax bracket, the moment you put money into one of those programs, don't even worry about what you're going to invest it in. I mean, it could literally just be in cash. You've already saved quite a bit of money in present value on your taxes. Of course, you do pay taxes later on. We take it out. We don't have to get into all the nitty detail. But short answer, Brian, there's no time like the present to get that foundation going. And it doesn't matter if it's $1 or $1 million.
Yeah, it's my favorite Chinese proverb. The best time to plant a tree was 20 years ago. The second best time is right now. I think it's so powerful. Yeah. Rod, I want to ask you this question. It's something that you and I didn't talk about off air, but obviously you are one of us. You are a fellow entrepreneur. And with that in mind, we all have different formats and styles for how we manage our business cash flow, which obviously cash is king. There's a reason why we have that phrase in business. For me personally, I love the profit first approach. So every single week when all of our payments come through, I have X percentage distributed to owner's pay, X percent distributed to operating expenses, X percent distributed to taxes. What's your insight and advice there? As a fellow entrepreneur, how can we manage that stuff? Because we're making decisions about what to do with all of our money. Is it a percentage? You talked about the importance of compounding and consistency. Is it a percentage we should look at? Is it a takeout after your life expenses, your business expenses? How do you navigate those waters with new investors?
Yeah, I mean, I think that when it comes to profits that are happening on investments made, there is really no substitution for compounding if you're more on the passive side. Just let the money continue to work. If you're a little bit more active and again you have an interest or passion about it, you can learn how to time things a little bit better and distribute. That's when it comes to investing. If you're referring more towards cash flow or cash management or reinvesting back in a business, that really depends so much on the business. The magic formula that I'm sure a lot of your entrepreneurs are trying to solve for, and that we've kind of solved for, is what is our, the net present value of kind of our portfolio and what we could potentially invest in or where we could allocate money. And then what is the lifetime value of our customers, and then how much it costs. It's the same stuff that Cuban, and they all nail people on the Shark Tank, right? What does it cost for you to acquire a customer? Because then if you can tweak that and know that you can invest this or that or this and this in these various sales and marketing efforts, it almost becomes a little silly to make sure that that's not the engine that you're always feeding, right? The lead engine is what you always want to be feeding. That's the lifeblood of a business. Many businesses get to a point where they plateau because the owners and the operators are just super burned out on the hamster wheel of trying to constantly get that new business in the door. That's why you want to invest now in trying to figure out those magic formulas, depending on what your sales and marketing tool. Ours is all done online, and we have a very good sense of exactly what we'll get back for every dollar that we spend. And if that return is higher than a return that you can get elsewhere, that's probably where you want to be investing your money.
Yeah, Rod, we're going to talk in a second about you actually trading and people getting to actually watch you trade, because I think it's so cool the way that you operate with your business. But you've already alluded to a few different ingredients that go behind a business's success. And speaking of Shark Tank, you're right. There are some that succeed and some that don't succeed. With your experienced eyes, with a lot of experience in trading and valuing companies and seeing what's going to grow, what are some of those variables that you're looking at with regards to finding the next Lululemon? When you put that comfortable pair of joggers on and you think to yourself, gosh, this is a great product, it's got a great price point, what are some of those variables you look at?
Well, I can just give you an example of some of the companies that I invested in myself, and it was really just driven by a real love of the product when I tried it. So one of them, an example, is called Beloit Kombucha. So I have Crohn's, which is a digestive disorder that can cause inflammation. Many people have gut or issues with their digestive system. It's kind of become remember when you could eat a whole loaf of bread and then you couldn't eat a whole loaf of bread and you're supposed to eat gluten or you're not supposed to eat gluten. It has become the rage of health, is discussing diets as it refers to gut health. Anyway, I didn't like kombucha. I thought it tasted bad. It tasted like vinegar. It had a lot of calories, actually, decent amount of calories, 100, 150 calories. Came in big bottles. You had to keep it cold, and it had a lot of sugar in it, which is not good for your gut. I found my way to a company that had created a formulation of powdered kombucha, so similar to like a liquid IV, and I just loved the product. And it hit close to home, and it was shelf stable. It came in little stick forms instead of a bottle. It only had 1 gram of sugar. All the gut benefits and the probiotics of regular kombucha. So when I saw all those things combined, now I knew nothing about the powdered beverage market or the beverage market or consumer packaged goods or anything. I was a guy that could look at screens and sort of push buttons and make money. That took me 30 years to figure it out, but I figured it out. So I also liked the challenge of that particular business. But yeah, I think it starts with, none of this hasn't been said many times. What is the product? What's the management or the people behind it? And then ultimately, is it unique, or what's the business opportunity? And Beloit Kombucha really checked all those boxes for me. So now I'm pretty excited to be kind of on my way to being a majority owner of the company.
That's incredible, Rod. That's something I actually didn't know before we hit record here today. And as someone who lived in Los Angeles for quite some time, it's all the rage. And it's something that I saw in LA. And now as I travel around the country, kombucha is making a wave. I mean, isn't it, we call the gut the second brain these days? Like, it is integral.
Yeah, exactly. It's the second brain. That's what it says on our little white paper. Yeah.
Yeah, I love it. Yeah, and that's sweet. And again, going back to my college days, professors telling us to pull all these annual reports and quarterly filings from the SEC's website. You're right. Yeah. As customers, we know things. When I bought my Tesla 6 years ago, again, living in Southern California, I recognized this is an incredible car. And sure enough, the stock has done me quite well over the past few years. So it's cool to see great products have a tendency to grow. Speaking of which, Rod, I talk to a lot of entrepreneurs. We have a lot of incredible entrepreneurs here on the show. Very rarely do I see some with the freaking reviews that your business has, because what you're doing with Traders Dev Group is honestly incredible. The way that you're delivering financial education, but also your attitude towards the fact that in order to learn it, you have to actually do it. Talk to us about Traders Dev Group, because people who are listening to this, they haven't seen your business the way that I have. How does Traders Dev Group work? And what is this about your live streams every single trading day?
Yeah, so the first thing, we started this conversation talking a little bit about investing. I want to make it very clear that there is a difference between active trading on short-term timeframes and investing. So Traders Dev Group is mostly a trading organization, active trading organization, where the goal is to teach people how to look at markets and extract daily or weekly income from the markets, doing something that everyone says is not possible, which is you can't day trade. You can't, that's for gamblers. That's super high risk. Everyone's going to lose all their money, yada, yada, yada. So the Traders Dev Group is a trading organization. And what I came up with is I was like, the only way people are ever going to learn this is not only by doing, but by doing it while also watching me do it every single day in front of them. with my screens up, with every single position. They want to ask a question about my thought process. I'll tell them exactly what I was thinking and why I was doing things. And everybody is in a completely different spot. Like when someone joins our group, it's like walking into the middle of the movie, because we have hundreds of traders who've been with me for 5+ years. They know everything. They help out and all those types of things. But really what it's all about is it's skill development. Trading is a skill. Active speculation is a skill. You're making the best decisions you can with incomplete information. So the only way to develop that skill is by practice. But here's the key. Here's the key to Traders Dev Group. Not just willy-nilly practice, right? You could sit down at the piano and play your scales all the time. But until you actually probably worked with somebody, you could get some of this from a video, but until you really got a piano teacher who teaches you how to deliberately practice, how to make each practice section actually improve your skill, that's what we're all about at Traders Dev Group. And we now have 400 or 500 people that tune in almost every single day. We're hoping to continue to grow that community. And one last thing is that we actually trade this futures market, which is something a lot of people don't understand or know about. Everyone understands sort of stocks. Let me, if I can distill anything to the audience here, do not trade stocks. I know that's going to be blasphemy to some people, especially stock traders that are pretty good at it. Do not trade stocks. Stocks are meant for investing, where we started the conversation. You are buying a part of a company. Let that company grow for you. Let it pay you dividends. Don't ever sell it if you get a big winner. Just hold on to it. That's what stocks are about. The futures markets actually exist for day trading. They are liquidity providers of speculation. So we are actually trading the things that were invented by the financial markets to be traded. So if you know nothing about futures, you can go to cmegroup.com. That's cmegroup.com. And this has nothing to do with me or my company. And just learn about the power of futures, especially if you're interested in things like more short-term trading.
Yeah, Rod, gosh, I love that overview. And I already knew you could probably do a multiple day thesis teaching everybody and a dissertation on all of these things. That's absolutely true. So I really appreciate you dropping these real life resources for people to go deeper into. But it is fun also to hear your entrepreneurial insights, because you just said hundreds of members tuning in. And as someone who has read the reviews extensively of your business, it actually seems like a community. You give the example of there are guides who have been there for years with you that welcome new people and help answer questions. And you're obviously on there to help answer questions. Give us some insights there, because as a practitioner, you've been a successful investor and trader for a long time. What was that transition like, actually starting your business and helping others to get into the world of trading as well?
Well, that's a great question, because it was rough for the first 10 years. And the thing that made it rough was that until about 5 years ago, the products that we traded, the way they were structured was when they would move, it was quite a bit of money. So just think of it this way. If you owned a stock, we were trading things that were very expensive stocks. They weren't stocks, but they just had a lot of leverage built in. So it was very difficult initially. The same trading style, same kind of thing. We didn't have the room running every single day. But what's happened in the last 5 years, starting in 2019, is the futures markets started to introduce a product that was 1/10 the size, which is great. That means it's 1/10 the risk. It's 1/10 the movement. So you can think about this. The old product would be $100 every time it moved. This new product's only $10 or $1. So a lot of people just feel, and myself included when I'm teaching people, we feel so much more comfortable with smaller numbers while we're learning, right? So that was the first thing, is that we now have these smaller products that they're not demo, they're real products, but you can learn in a way in which you're not looking at a big, scary number on the screen with the fear and greed and all those types of things going on. So that was a major help. And then the second thing I finally realized is I'm just going to, every time someone asks about the strategy or the stop or what the target, or I think something's going to go up or down, I'm just going to say, what is your daily risk budget? That's all I care about. I can teach you all of this in a second. If you had $5,000, you would be able to risk about $250 in my room every day. That's it. Hard stop. You're down $250, you hit the close button, you're done for the day. I know it sounds simple, but that's all you have to learn how to do. You could push buttons like a drunk monkey and get completely lucky. Sometimes they'll go up, sometimes they'll go down. If you never violate your daily risk budget, you'll stay in the game long enough to learn how it works. That was the big change, because what we could do, and I'll shut up in just a second, I'm rambling, but since the products were smaller, we could trade a lot more within our daily risk budget. In the old way, our daily risk budget was $250. You could lose that in 5 seconds if the market went against you. Now you have more time to learn, to stay in the game, and to deliberately practice.
Yeah, Rod, well, for sure, this episode is going to be blacklisted by every casino around the world because it's the opposite of what they'd
I don't have an edge in the casino. That you don't have an edge. Yeah.
Yeah.
Make sure you get a lot of free drinks before you go broke. That's how you
exactly.
eat yourself even.
Yeah, I hear you on that. I think it's fascinating because it's something that, again, as an economics and finance major in undergrad, it's something that I've long known. This is a huge opportunity, but for one reason or another, we don't encourage it societally. So my question to you, Rod, is, and this is also a little bit of insight into understanding your customer, sticking with our theme of entrepreneur to entrepreneur, having this conversation. Talk to us about the people who are within the group. Who are they? Is this their business? Is this their livelihood? Is this their full-time income? Or what do their lives look like?
One thing that I absolutely love about what we built at Traders Dev Group is the diversity of people. Typically, trading education or active trading education looked a lot more like me. It was very skewed, very, very heavily male and very, very 50 plus. And generally, it was people, men that had retirement savings or other money and just had gambled it on their own and lost $20,000 or $50,000 or $100,000 trying to trade, and they finally say, "Oh, I better go figure out if there's a way that I can do this or at least lose less money." The community we've built is so diverse, and it's diverse also because the cost to get involved. We have programs where we will actually provide the funding for you. So if you demonstrate that you are proficient at this and you really want to have a go at this, you don't ever have to risk a dime of your own capital. You do have to pay us a subscription. You have to pay to learn. It's not a free lunch. But because of that, we have people from all over the world. We have people of all different types of backgrounds. And the typical sort of 50 plus male is still about 50% of our group, but it's not 90% of our group. So very, very diverse. I get super excited when I hear about somebody in maybe Asia or Africa where you can trade with our group. And the dollars go a lot further in some of those countries. So someone might have a profit objective of $500 for the day in our group. That person who makes $500 over the course of that week, that's changing their lives over there. So in terms of who's professional or what people's goals are, I always try to set the expectation that for at least 3 to 5 years, and this drives some people crazy because I can accelerate. I'm there every day. You're a great teacher. I'm going to leapfrog a few of these steps. Okay, fine. But for 3 to 5 years, your objective should be the first year, how not to lose. Years 2 to 3, how to supplement your income. And then years 3 and beyond, how to really complement and take your income to the next level. So a little bit of everything, but we do have some people that are now officially full-time, and some of the screenshots that we see, I get a little choked up about it because some big numbers that some people in our group are putting up, and it's just fantastic to see.
Yeah, I love that. Listeners, I'm going to call this out for each and every single one of you is that we all feel this way. Myself, I feel this way. When we hear from you listeners that you went full time in your business or you just locked in your biggest client, you want to celebrate that with someone. Myself, I feel that. Rod, clearly you feel that with your clients. So listeners, no matter where you are in the world, no matter where you are in your journey, no matter what your life or personal or business or financial circumstances are in your situation is, you are the ones that people love to serve. And Rod is out there literally every single day. Rod, I don't know if people give you enough credit for live streaming every single day. That is no easy feat. So huge kudos to you. I want to ask you this question. As we come towards the end, I really mean it. You could probably do a year-long class on all of this, which you do in your business, which I think is incredible. But that is looking at time horizon. For someone like you, you're growing your business. You're also growing your portfolio and helping others grow their portfolios. Where does your time horizon look? I always hear different insights from entrepreneurs as far as looking out a month, 6 months, a year, people who work on quarterly basis, people who have a 10-year plan. What's your take on future-looking growth, and how do you navigate that as the CEO of your business and as a trader?
Yeah, it's a great question, especially when it comes to there's a lot of people that believe that really active trading and only eating what you kill every day on the screens or whatever is a younger person's game. And I feel some of that. The ability to sort of sit or focus and all those things change as you get older. But I haven't set any particular timeline. I think I fall into that category. You've mentioned a couple good zingers, words of wisdom. It's just, if you really love and enjoy what you're doing, and I know this can just make people's skin crawl if they're in that tough part of their entrepreneurial journey where like, oh, I want to be my own boss and I want the freedom and I know I can do this and I love my product and it's just, you're just getting smashed in the face all the time. I get it. I understand. But you can get to this point of a flow state. And when you're in that flow state, it really doesn't feel like work. And I feel like I'm kind of in that, with Traders Dev Group right now. And, I've diversified into other things that I know nothing about. So I'm constantly learning when it comes to those businesses. And that keeps me really engaged. So I really don't have any long-term plans. The one thing I did do over the course of the year is just graduated some of my best, I don't like to call them students. I like to call them like collaborators or community members. We call them TDGers. That's Traders Dev Group, TDGers. So now we have 4 or 5 that are really on the verge of being able to take over the reins. If I sleep in one day or can't quite make it, they can run the room and everyone enjoys seeing a slightly different style and hearing a slightly different voice. So we have some legacy stuff that's probably going to go away, stuff that I do, and some new blood coming in there, transitions. So I don't have any really long-term plans for anything. I enjoy what I'm doing right now. We're going to stick with it.
Yeah, I love that. Rod, I'll confess to you publicly here that I intentionally asked that question of entrepreneurs because more and more people are in our boat. I think when I was in college, a lot of business school professors were preaching, have a 5-year plan, a 10-year plan. But I think this is the reality. These conversations that you and I are having here is that keep serving people and keep seeing that evolve. I think evolution is the name of the game. You're showing it there. Your services will evolve. It's so cool that you have students or community members who graduate and can step into those roles and people see that different perspective. So huge kudos to you and what you've built. And I always love asking this question at the end of our interviews because I don't know which direction you're going to take it in. And that is, what's your one piece of advice? Knowing that we're being listened to from thousands of entrepreneurs in over 150 countries at all different stages of growth or just at the beginning of their growth journeys, with your entrepreneurial hat on, what's that one thing that you hope they take away from today's episode?
I'm going to go a little woo-woo on you, and I won't tell you exactly how to do this practice, but I have taken my health as a major priority, even when things get totally crazy, because a little bit of my condition, I just always had to prioritize health. And one thing that I had known about for 30 years, 30 years was meditation or a meditative practice. And for whatever reason, I just never, which is wild because in my business, there's a gentleman named Ray Dalio, who's about as big as it gets. He's one of the biggest hedge fund managers, fascinating guy, major philanthropist, really, really fascinating gentleman. And he's been doing this one particular style of meditation and talking about it for as long, way back when I was at Merrill Lynch. So over the last couple of years since the pandemic, I've really integrated that in. And if I could leave, especially for everybody in life, but for entrepreneurs and things, just to be able to have a practice that can calm your mind and get you more back to your core, because all this stuff that is entrepreneurial, I mean, if you want to ever know whether you're starting to get it down, close your eyes and try to have an entrepreneur's mind shut off for a little while. It's super hard, like really hard. There are a lot of great apps. There's a lot of great things that people can look into. I happen to use one called TM, but it's been life-changing for me, and I never miss a session. So took it in a different direction, like you said.
No, it is. And that's why I love that question. And it's super actionable. And this is the real insights into the mind of an entrepreneur, not just a trader. So Rod, I so appreciate those insights, but I also know that listeners will probably be very keen to see what all the magic is inside of Traders Dev Group. So for listeners who want to go deeper into all this great stuff that you're putting into the world, drop those links on us. Where should they go from here?
Right. So hopefully we'll put them in the show notes as well, but it's Traders Dev Group. That's DEV and then group, Traders Dev Group, and just hit the big blue button in the middle of the screen that says get started for free. I don't give you some crappy ebook. You're not on some newsletter where I'll spam you. You're going to get access to a 30 video course that you don't have to know anything about anything that we just talked about. The video course is completely free. Just start there. And you'll also be able to calibrate. If you're interested in what I'm talking about, then maybe looking more into Traders Dev Group or actively trading is for you. If you're not, then you kind of know, hey, I'm going to go back to dollar cost averaging and go over here, run my business, and just get the foundation started that Rod talked about. But tradersdevgroup.com, hit the get started for free button.
Yes, listeners, you already know the drill. We are making it as easy as possible for you to find a link to Rod's business website at Traders Dev Group. So definitely check the show notes. You don't have to remember the link. Just click right on through, no matter where it is that you're tuning into today's episode. And he's not kidding when he says his website is so simple for you to get started. It is literally right in the middle of the screen. Get started for free. So take him up on that. It's going to give you those free insights. So Rod, on behalf of myself and all the listeners worldwide, thanks so much for joining us on the show today.
Thanks. It was great being here. I appreciate the time.